Welcome back to Unlimited Capital. I'm your host, Richard McGurr, and today we're talking with someone whose story perfectly illustrates that your biggest perceived weaknesses can become your greatest strengths in capital raising. My guest today was Zorya Belanger, co-founder of BREI Properties based in Edmonton, Alberta. Zorya has built a portfolio of nearly $28 million in assets under management across 177 units in Canada and the United States. But here's what makes her story compelling. Zorya started as an introverted engineer who was terrified of phone calls and public speaking. Today, she's confidently speaking on stages, hosting meetups, and has successfully completed cross-border deals, including a 144-unit value-add project in Houston, which they recently refinanced from $11 million to $18 million. What's particularly unique about Zorya's approach is how she's mastered the complexities of managing international investors. She's created sophisticated structures that allow Canadian investors to easily participate in U.S. deals without all of the typical tax headaches. And she's proven that geographic boundaries don't have to limit your capital raising potential. So with that said, let's get to the show. Hi, Zorya. Welcome to the show.
Hi, really nice. Great to be here.
Yeah, it's great to have you on. So why don't you tell us a bit about yourself and how you became a prolific public speaker?
Okay, well, I wouldn't say I'm a prolific public speaker, but I do some public speaking. I just actually finished speaking quite a few times at a conference, a real estate investing conference about multifamily and about raising capital on stage this past weekend. Yeah, so my story starts off, let's start with childhood. I was very, very shy. And I'm an introvert. I'm still an introvert. I don't think you can change that about yourself. But I used to be terrified. I used to never put my hand up in class, even in university. I would never say anything. And I would say it all comes down to practice. When I first discovered, I was an engineer by trade. And, when I first started into real estate investing, I discovered it. I quickly realized that I would have to speak to people, especially if I wanted to get anything done. Can't just sit behind a computer. And so that's when I did some research and discovered that Toastmasters could help me. And that was good because it's a safe place to practice. Like everybody's there to practice. And it's not just practicing speeches, but they also practice impromptu. And so I remember the first time I went there, this was like 13 years ago. And, they would give you questions to ask or questions, and then you would have to just come up with an answer. And that was terrifying. Like at that point, if I was in a room with, say, like 20 other women and we had to introduce ourselves, I'd be shaking. Like I could barely do that. So that's kind of where I started. And little by little, I think I was in that program for probably 5 years, just kept getting better and better. And it literally just takes practice. And then outside of Toastmasters in my engineering job, I would take opportunities to speak, whatever kind of seemed like a little bit outside my comfort zone, the next scary thing. And so if I was asked to give a presentation to the other engineers in the office, I would take that. And next, they would ask me to do a presentation for a client, and I would do that. And next, I actually spoke at a university class and taught a lecture. And I just kept building and building and building on that. And I got better at calling people and being on podcasts. This would be terrifying. I definitely would have said no to this, even 10 years ago. So yeah, it's just about getting practice. And now I host a couple of meetups. And I also regularly, get on stages when I get the opportunity, because when you're in real estate, whether you're raising capital or finding deals, you need to connect to people. So you need to get yourself out there. So that's what I do now.
That's amazing. So how have you integrated this? So it sounds like you've built a whole process about getting speaking engagements, speaking on a regular basis. You've started your own group. One of the things that I like to get into with guests is how you don't just turn a tactic into I'm going to do this one time, but everything needs to be a repeatable system that you build into your business. So how have you done that?
Well, through meetups, I just have a regular occurring meetup every month. I need to get out there and host it and speak. Through that, it's a combination of things. So that I have a regular newsletter that I put out. I'm try to get myself on social media. I would say it's more like people coming to me at this point, asking if I would be on their podcast. I'm not actively going out and doing that. And so that's been working for me so far. My journey started off, in residential into multifamily. I was basically the syndicator doing all of it and raising the capital, putting together the deal, doing the asset management. And as I've evolved and as I've gone into bigger deals, I'm more focused on the asset management side of things. So not actually as much as capital raising, but that was a key skill that I needed to learn in order to get myself into bigger deals. So now I'd say I'm not like actually actively pursuing speaking engagements in order to raise capital, as my strength actually lies in asset management, but it's still good because we still all as a partners all contribute capital to the deals that we do.
Yeah. Tell me a bit more about your business and what you're up to these days.
So I'm actually based in Edmonton, Alberta, Canada, and I've been investing since 2013 with my husband. And like I said, started with residential, got into small new build multifamily. That's quite common in Edmonton, especially over the last few years, is building like 6-plexes and 8-plexes that are brand new. There's a lot of financing and city planning that is just perfect for that strategy. And then through my experience through that and my network, I got the opportunity to be part of a bigger deal in the US. So I, with partners, we bought a 144-unit complex in Houston. And like I said, the reason I was able to get into that deal was because of my experience with raising capital and ability to bring capital to the deal. But I also was able to bring in the asset management component. And so that's what we closed on that 2 years ago. And for $11 million. We put about $2 million into CapEx into that. And then we refinanced it just this past June for close to $18 million. And so and now we're just more stabilized and looking to do our next deal.
So what was the first deal where you did bring in outside capital?
Outside capital, that would be our the third residential property that we ever bought. So, like most people, you start off with a little bit of money in real estate, but then you run out of it pretty quickly. So we were able to buy like 2 properties with the equity we had in our condo at the time. And then that was it. And we ran out of money. So we started to get into joint ventures. And so there's just like partnering with one other person and buying residential together. And so it started with family and then friends. And so that was, in our first year of real estate investing that we started focusing on doing that. So we hired out property management and everything else, even when we only had a few doors, to focus on being good at, partnering with other people. And so we did it in joint venture structure first. And then as we scaled into multifamily, started doing corporate structures and bringing in multiple investors at that point. So my first syndication would have been on a 6-plex in Edmonton. We started off putting our own capital into the deal to get the project going because it was a new construction and we needed some money up front just to get it under contract. But the plan was to raise capital for that. So that was a good strategy because it was such a long timeline before the property was built and before we had to be closed on it, that we had some time to raise capital. And people knew we had this under contract. They knew exactly what we were buying. So we were able to bring in 4 people at about $70,000 each, bring them in. None of them had to guarantee the loan. We could take care of that. And they just came in as capital. And we were able to just reimburse ourselves the money that we had put in. And so basically recycle our own capital in order to start the next project. And so it's an easy way to get started, I think, because it's hard to raise capital for a project that you don't have under contract or something that you don't have the ability to close on yourself. So they knew that we had confidence in the project because if we couldn't raise the capital, we would close on it anyways and we'd buy it ourselves. And so
that's very cool.
How it all got started. And because I know you probably have a lot of people on here that have a lot of experience and are releasing millions of dollars every month, but they all started, with their first deal and just little by little growing that experience.
Yeah, but what I would counter that with is that the vast majority of people listening are more likely probably more in your shoes, and I think that that's also the other thing. One of the problems with the show, I would say, is that I talk to a lot of service providers and everybody who's doing things at like a crazy high level, and it may seem out of touch, but the reality of this situation is like your first deal, so you had 4 partners at 75,000 each, so you raised $300,000. Like
Yeah.
that's a very achievable raise. Feel that pretty much anyone who has the wherewithal to put a sixplex under contract probably has the wherewithal to find 4 people with $75,000.
Yeah.
So like, how did you go about like building that initial list?
Mm-hmm. Yeah, good point. Because you absolutely need that initial list of potential investors. And I teach this now through my multifamily makeover program. And like, if you need 4 investors like that, you have to have at least like 20 people that are potential investors. So people that are, have expressed interest that you've talked to, but they're not committed yet. I would say I go about it 2 different ways. Like you have to have people come to you in one way. So that could be being consistent with putting yourself out there. So my monthly newsletter is one key thing, just putting stuff on social media. But a lot of people I find, a lot of my investors are not on social media, actually. I found a few through there, but a lot have been, through people I've just met in different ways, whether it's past coworkers, people from university, just, we started off with just taking all of the email addresses that we had, which was about like 300 people, and just putting it into an email marketing platform and starting with a newsletter. And at first it was just about, the residential property that we closed on. And we would just
telling your story, right?
Just update people on what we were doing,
Yeah.
mostly just, giving updates, giving information, what's going on in our market, and just slowly over time, just adding people to that list. And now we're at like 1,800 people. And it just grows over time. And then just that consistent communication, I think, has done a lot better than social media. And because, it's like a lot of people are not on there and they don't see everything you do. So, but you keep that consistent. And then, you have just people reach out when you do have a deal, you put it out there, and people come to you and book a call. You have that kind of discovery call. I always focus on, once I heard someone say, you're not selling, you're not trying to convince anybody of anything. You approach it more as if you were like a doctor and you're trying to like discover what is the issue here and like, what are they looking to do? What's the challenge? And then you have to, both you and them, figure out if your opportunity is a good fit or a solution or a cure for what they're experiencing, right? And that's why I never even take it personally when they say like, no, this isn't for me or anything, because like, okay, then that's fine. Like, it's just not a good fit at that moment. Oftentimes it's just not, the timing's not right. So that's why you need like those 20 people that are potentially interested who say, once you come up, like you present them with something similar that you've done before or your plan of what you're going to do. And then if they say, I'd be interested in taking a look at that when you find something similar, then you go back to them when you do find something. Most of the time, like 3/4 of them will say, no, this is like, I just have my capital tied up right now, or they, it's just not the right time. That's what most common issue is. But you find like the 3-4 people that are ready to go, and you go ahead with them.
Yeah, I think that's something you said about how it's just not the right time. That's usually the issue when you get a no. And that's why, like, you keep the contact warm, check in quarterly, something like that. In fact, there's a famous internet marketer, Russell Brunson, who says like every time he captures leads, and he has like a very hard sell funnel where like he's trying to get a sale in like within the first 7 days or something like that. But that what he does is his success rate's about 15%. With that list, he runs the exact same promotion exactly a year later and has identical opt-in. Because you never know like what's changed in that person's life. Like they could even have been a hard no, but like they're like so much happens in a year and you're like a completely different person by the time a year has gone by. And so when you like hit them with the exact same messaging, like you can hit them with the exact same deal, and a person who was a hard no, I'm absolutely not interested, can be a big yes. And that's especially if you've done your job warming them up, like with your monthly newsletter, like you're talking about in the middle. You come back to them later and there's a strong, at least another 15% chance that they're going to say yes.
Yeah, that's exactly been our experience. And it could just be, yeah, something changed in life. And it could be many years. We've had people follow us for
Oh
like
yeah.
10 years following our journey. And yeah, it's just like, okay, now they have the capital. Now they like how this deal in particular is structured. And like, yeah, and then they're a yes.
Yeah.
It's just about that consistency in your messaging. And, I could probably do it more often than monthly, but I don't want to drop that consistency. And so you have to start with something that you can live up to.
Yeah. So like what you already mentioned that, you're doing a lot of development these days, but particularly you're doing a lot of development in Canada. So how does that differ from investing in the US? Because as I understand it, you invest both in the US and in Canada?
Yes. So I'm in Canada, and it's like greenfield. So it's in brand new neighborhoods. We're buying, like, it's kind of like pre-construction. We put down a deposit, then we get the financing and take possession once it's complete. So not getting too much in the development side, which is a lot more riskier. But yeah, I have always wanted to explore the US. In some markets there, it's a lot better. Like the gross, like just the price versus rent ratio is so
The
much
yield.
than it is here. And even with the exchange rate. So when when I started getting into multifamily here, I got connected to the other asset managers and other people, a lot of them in the US, and I could see the kinds of deals that they were doing, a much larger scale. It was much easier for smaller investors to buy like a 40 unit. Here, everybody's buying smaller stuff. And I think it's just the way that apartments and complexes were developed. Like, we don't have these giant communities everywhere as it's common in the US. And here also REITs and institutional investors, they're buying up 20 unit properties. So
Oh, they go
like,
all the way down to 20 units in a
yeah.
REIT? Ha!
But I know in the US, it's more like probably 250 or bigger that they're like
500.
looking at 500,
Exactly.
right? So that's why it's easy for a group like us to come in and buy 100 or 150 in the US, which would have a lot more competition on something like that here. So that's one of the things that attracted to me. And obviously the diversity of investing in a different country, being paid in a different currency, all of that helps with investing and just setting ourselves up for the
Yeah.
future. So
Has it been, so I presume that most of your investors are Canadian. Do they have an appetite for American investments? And like, how hard is it to explain? Do they have a lot of concerns?
well, when we were raising capital for this deal, kind of like 2 to 3 years ago, there was a lot of interest, and there still is a lot of interest. Not everybody here is happy with the government and how things are going, and they really see that diversifying into the US as a really good thing. So there is quite a bit of an appetite. The issue is, dealing with all the cross-border taxes and legal structures. And so that prevents a lot of people from doing it. So the way that we set it up is we had a limited partnership in Canada set up, and our investors invested into that limited partnership. And then that LP invested into the US LP. And
So
we
that you
take
basically
care.
had one investor in the US entity and that was the Canadian entity and you did all the withholding between. So I'm getting really into it. I used to live overseas. So
Okay.
I know how this stuff works. So like you have to do withholding, right? In between the two entities. And that's usually the problem with taking foreign investors.
Yeah. So we just make sure that we take care of the taxes. We have our Canadian accountant talk to our US accountant. We file, like, that Canadian entity takes care of the tax filing in both countries. And then it's really easy for the Canadian investors. They just get a Canadian tax form that they file with their own taxes. And so they don't have to deal with filing US taxes. There's pros and cons to this method too. I know other Canadians who invest in US multifamily who have their investors invest directly into the US LP. And there are some advantages to that as well, but they have to hold their investors' hand through doing that first year of filing US taxes. But if you do it right, you get a credit for what you pay in the US, and then you
It
have to pay the
offsets.
difference in Canada, because in Canada, we just have higher taxes. And you
Yeah.
can't get away from that. But there's a way to at least not pay double taxes.
Oh yeah, that is nice. I mean, that hadn't occurred to me. That is a major factor. It's just because when I have occasionally get requests from a foreign investor to invest in our funds, and our policy has just been I mean, frankly, hard no,
Yeah,
because it's just we'd have to develop an entirely new process around it,
you do.
versus I
Hey,
think, yeah, versus you guys are like, no, this whole structure is designed around, a foreign investor, and clearly you have a lot of them. Yeah, no, that's
yeah.
quite interesting.
And we did actually bring in US investors as well. Like that complicated the structure quite a bit. And I don't really recommend that for people getting started. Just have like stick with Canadian investors or US investors or just one country because
Yeah.
it does complicate it.
Yeah, I actually know a couple people in Canada who are raising into US deals, like now that I mention it. And what's funny is like both of you are women as well.
Oh, yeah.
Yeah. No, I mean it seems that like, Canada's an attractive market, I think. I think it's probably because you guys can at least wrap your head around the US market pretty well, and like you're pretty familiar with it. I mean, we're right next door.
Yeah.
And so is the story really just better yields?
It's mostly about better yields and ability to get into bigger properties. Like we're looking at a approximately 400 unit property, and that would not be achievable here very easily.
Yeah.
And so, like you get just a bigger economies of scale when you go bigger. And
Oh, that's
so, yeah.
interesting.
And then just the diversity, like just being not having all of our properties in Alberta because it is pretty cyclical here. So, if the economy doesn't do well, all of your properties and rents go down, values go down. And so right now, where we're invested in Houston, Texas, it's a very different market right now compared to where we are in Alberta. Alberta's booming right now. Everybody wants to invest in Alberta. Versus I'm hearing in Texas, there's a lot of operators that are having trouble and they're selling because of that. And so it's a completely different market right now. And so that's another thing that we can do is where we just invest where it makes sense at the time and not be kind of limited in where we are in the real estate cycle.
So I'm curious, given that you're the asset manager, what are the challenges to managing so post capital raise, managing an asset in another country? How do you handle that?
Yeah, that's a great question. It absolutely comes down to the other team, like the partners and the team that we have in place. And so having a really good property manager has been crucial. They introduced us to a fantastic contractor. So when we went through our $2 million CapEx, I didn't have to worry too much about what was going on. We had to visit. I visited every 2 months as the asset manager, but we had a strong team in place and we had also a construction manager that would visit regularly. And so that helped me do it from afar and just regular communication. We still, even now stabilized, we have our weekly calls with the on-site team, keep them accountable as what they're supposed to be doing. And that's a key thing. And keeping someone accountable and kind of tracking certain tasks can be done from afar.
Yeah. Yeah, I used to manage international teams. In my previous career, I used to have 80 employees in another country, and then we had 2 employees in our country. And yeah, it's very possible. You just have to have systems in place and a lot of over communication and be very clear
Yes.
about expectation management.
Yeah.
Um, so yeah, I think that relates to, investor updates. I think that you mentioned this in your onboarding form. I like preach. I think that investor updates are like the highest ROI marketing you do, even though they're not quote unquote marketing.
Yeah, absolutely. Because like at the end of the day, they're investing money in your deal. And then what do they get in return? Like reports. And so you got to let them know what's going on. And it's so much easier to have a repeat investor than to have to start your process all over again with a brand new group of investors. And communication is key. Like when I see deals falling apart, it's often started with like poor communication. When started deals, when maybe they didn't have enough cash flow, they weren't able to do a distribution, they also stopped communicating. Like you can't do that. Like I think most people go into this, if you do it properly and actually educate your investors about the risks and the pros and cons of it, they don't have like extremely high expectations, but they know what to expect. They know that there is risk involved and things can happen. But they need to be communicated with. And so if you can come in and say like, this is what's going on, this is what happened, this is how we're going to be, how we're working on it. Yeah, that goes a long way. And even when these deals are going well, like we were having monthly communications within the first 2 years. And now that we've refinanced, we're going to quarterly. It's not as much to report on. But
Yeah, I
yeah, we're
would
keeping
agree.
those. And then I say, like, have my door open for all my investors to reach out to me by email or if they call, if they have any questions.
So what's the format that you guys do your reports in? Like, is it text, videos? What do you guys usually do?
It's like a new email and newsletter. And then regularly, I say like once or twice a year, we'll have more of like a Zoom call with everybody and do more of a
Mhm.
presentation as far as like what the past year was like. Um, Especially like right before our refinance, we were giving more regular updates on where we were with the refinance, but it's just through email mostly.
Yeah. I think another thing that people have to constantly remind themselves, because so I do our biggest fund is a credit fund. And so the thing is that, like, when I was working with my partners on that, they were like, hey, can we really slow down on the monthly fund updates? And their answer was like, nothing has changed. They're like, we're doing the same thing we did last month. And I was like, no, you can't, because you get like what is normal to you is totally novel to your investors. Like, you're the expert, you work in the business. Like, yeah, all of this is normal to you and you know it all. And you're bored talking about this stuff every month. But I was like, it doesn't matter. Our investors love this stuff, and it is our highest ROI thing that we do.
Yeah. Yeah, I still continue with my monthly newsletters and my all my investors get those and I'll give updates on how the property is doing. But then like for that specific property, like yeah, we've gone to quarterly. But yeah, there's pros and cons to that. Like, they're kind of having to trust that everything is fine until the next update. But
Yeah.
so yeah, over communicate is best.
Yeah. So let's go to a rapid fire round. What do you think, like, the number one thing? So if you were to imagine yourself right when you started doing capital raising, what was a mistake you made and something you would change in how you like evolved your business?
Probably a mistake was like only maybe communicating or reaching out to people when I had a deal and and trying to raise capital after getting something under contract. So it's way better to be, have the money, the potential investors lined up ahead of time and then go back to them and say, look, this is similar to what we talked about. Here are the details and like how much would you be interested in potentially allocating at this time and just keeping it really soft. Yeah. Having those potential investors, it also gives you a lot more confidence in putting something under contract.
Yeah, that's for sure. So what do you think one metric that every multifamily investor should track religiously?
Religiously, that would be, well, as a multifamily investor, and capital raising is your NOI and your
Yeah.
occupancy. Those are
Okay.
like our top two.
So then as a capital raiser then.
As a capital raiser, track the amount of people on your list
Okay. Okay.
and
No,
the
that's a
amount
good
of
one.
like, I guess, dry, like soft allocations you have. Like when you're actually in a capital raising mode, you've got to really track your investors and how much do you potentially have.
Yeah, so I think that's interesting. I've actually never taken that approach. And I say this as I should. I think it's good that you get the soft commits before you even have a deal. Like, and try and get that to a number. Like,
Yeah.
if I show you a deal that's X, Y, and Z, because it's cool, because the way I think about it, you can work that back into a scarcity clause,
Mhm.
because you can say, hey, when I put something in under contract, I only put things under contract when I know that I can close on them. And that means that all of my capital is pre-sold by the time something goes under contract. Is that that's a script that comes to mind as you were telling that to me? Is that
Yeah.
the script that you use?
Yeah. And going back to being a shy introvert, like I need to have a script that I follow. And I've kind of like perfected it over time. And yeah, it starts with saying like, these are like the highlights of the deal. This is how much we're going to be looking to raise. The average investor puts in 50 or 100,000. Therefore, I'm only going to need like 10 investors for this deal. How much would you potentially be interested in allocating for this deal?
No, yeah, I love that. So what's next for BRAI properties? Like, what are your big goals for the next, like, 2025, 2026?
So we are focusing on acquisitions in Alberta right now. We're also keeping our eye on the Houston and Texas markets. But we're kind of back in acquisition mode this year. Yeah, we're looking at for like a $5 to $7 million deal in the Edmonton area and trying to stand ourselves apart from everybody else. Because it's going to be an interesting next few years in Alberta. I think we're seeing some softening already. And so we're going to really focus it on buying properties that are going to not have as much competition. It was just actually not necessarily at the new builds because there's a lot of building going on.
Mm-hmm. So, yeah, that doesn't worry you? Oh, because that'll create the softening.
That's going to create the softening, the oversupply. So
Yeah.
we're actually looking at buying existing property.
Oh, that's cool. So, where can our listeners find more about you, find more about BREI? And you mentioned that you run a multifamily makeover. Tell us about that.
Yeah, so my multifamily makeover program is for getting investors who are more in the residential space into multifamily. It's more for Canadian investors because we focus on Canadian financing, commercial financing, and how things work. So it's best suited for those that are kind of looking to get into multifamily, especially in Alberta. And so it's a program, small group mentorship program that my husband and I do. And we basically hold their hand and teach them everything they need to know and help them through their first deal. And so if you need more information on that, that's multifamilymakeover.com. And you can also, an easy way to follow me is on Instagram at Zorya Belanger.
Oh, very cool. Well, thank you for coming on the show, Zorya. See you later.
Thank you so much for having me. See you.
Bye.